So today we're going to do a little bit of an update going into this week and my updated thoughts on what's going on in the stock market. Obviously, there's a lot of negativity out there, and just my updated thoughts on this kind of correction that's going on. I mean, the S&P 500, the Nasdaq are kind of in a correction, and also a crash. A few people are calling it a crash because when you do look at a lot of individual stocks out there, there's so many stocks that, yeah, the S&P is down, but there's so many stocks down now that are down, lost half the value within a 4 months period. And you don't really normally get them situations unless it's a stock market crash that's going on. And originally, like we said previously, it was a lot of growth stocks, a lot of small market cap stocks. But now we're getting to the point of view where a lot of the stocks that were holding up, a lot of the big tech, even a lot of the big tech is joining in, the likes of PayPal, for example, like Facebook, for example, is starting to go down a huge amount. And even the other stocks as well, like Microsoft, for example, is still dipping. Amazon's dipping a fair bit at the moment. So yeah, it's a little bit unsure whether we call this a correction or a crash, but for sure it is one of the biggest dips we've seen for a while, and it's probably one of the biggest dips that we've had that has happened over a long period of time. This is kind of being now getting onto a point of view where it's nearly 4 or 5 months, and for some stocks you can even argue over a year, but 4 or 5 months of really beating down stock market. This dip is kind of, the CV dip was a horrible dip, but the thing with that is that it just recovered so quickly. This is the first time that we're actually starting to enter a bit of a long period of time where stocks have not actually really done that well. So for example, if we look at the S&P 500, the S&P 500 is in a bit of a time frame where if you look from July, you're talking nearly 6, 7, 8 months of really the stock market not really doing anything. So we have, for the first time for a long time, hit a bit of a patch where stocks have not really done anything. And like I said before, just at the start of the video, you've got certain stocks that have lost, so much share price in the last, few months, over half the share price. So a little bit unsure whether to call it a crash or a correction, but it is a tough period of time in the stock market at the moment. And there's a lot of negativity out there. Now, we are going to talk about some of that negativity today. Just to let you know, though, I'm sure someone's going to make this error. The stock market is closed on the US side on Monday. It is actually President's Day. So if you do go onto the stock market or check your stocks on Monday, you're like, hold on, they're all not moving. What's going on here? That's why I thought I'd just share that, because I know one or two people will always make that mistake. But getting on to kind of what's out there at the moment, obviously there's a lot of negativity out there at the moment. The volatility is unbelievable. I mean, if we just go on the S&P 500, if we just go over let's go on the last 6 months, okay? So if you look at the S&P 500 in the last 6 months, I mean, you've had a period of time where, here, it loses 5%, then we had a bit of a rally, and then it carried on going on a bit of a rally to, like January time, and then boom, we had a big correction down nearly 10%, and in between these days, you've had periods of time where it's shooting up, it's shooting down, and in day movements, the S&P 500 is moving a fair amount. It's not moving 0 point something percent. These are 1-2% moves of the indexes, and as well as that, when you actually start talking about some of the more the higher risk stocks, if the S&P 500 is moving 1-2%, a lot of these higher risk stocks are moving 5+% on these days. So the volatility has been so big over the last couple of months, and especially this last month as well. The volatility has been insane, and yeah, I mean, obviously the reason why is there's actually really a combination of a lot of factors. Every kind of week there's kind of a new reason why the stock market's falling down and losing a lot of value, and then it kind of tries and recovers, because realistically, you look at a lot of stocks now, there's a lot of stocks out there like at, historical valuations, or say the cheapest valuations have been for 2-3 years, and quite a few people, a lot of bulls are kind of looking at that and going, you know what, I fancy buying this. And you have a few people that are trying to buy up the dip, and then there's also that negativity and the volatility, and people going, oh, but what about this concern, what about this concern? And it's been just a combination of loads of different concerns, and yeah, I thought I'd kind of talk about some of them. So obviously the big one that was kind of pushing on the stock market this week, and if you watch my video on Sunday or Monday it was last week, I said that the week coming up will depend on this. This will move the stock market, and if things do calm down, then we'll probably see a stock market that does well. If things kind of get heated up, then we'll see a stock market that does not so well. And what kind of happened, it was pretty chilled on the first couple of days, but the tensions just kind of rose a bit more as the week kind of went on, and then we had a negative stock week. And I think stock market week, and going into this week is, again, I think it's very much the same situation. Depending on what happens with this story, this will be what sends the stock market up if tensions kind of ease. If they don't ease, then they will see the stock market probably go down. Obviously, I'm not going to give my thoughts on that situation too much because it's a bit of a political situation. But what I would say is this, is that there's all this media attention out here saying, oh, there's an invasion imminent, and you'll see here the BBC has come out with Russia plans biggest war since Europe since 1945, Boris Johnson, and I'm seeing a lot of the, I would say, a lot of these, UK headlines, US headlines, and they're always kind of like pushing towards Russia and that they are going to do an invasion, which, obviously, it does kind of look the case when you look at, why have you got 200,000 troops on the border of Ukraine, but, I'm seeing a lot of this tension, negativity put out there that Russia are doing this and that. But you look at this here, this was on the Friday the 11th of February, and it said that US warns of distinct possibility Russia will invade Ukraine within days. So this was last week. So obviously, Biden came out and said that Russia are going to invade Ukraine in the next few days. Has it happened last week? No, it didn't. So I see all this kind of like negativity pushing out there against Russia, but obviously I don't want to get too involved in it, and obviously there's obviously something building there in the background. But this is the thing, is like from the media outlets' point of view, is that as well they want to create, they want to get bums on seats, they want people to read the headlines, they want to kind of, build up fear, and fear overtakes every emotion. Fear is the big emotion. You only have to look at the stock market now. How many people are making bad decisions, how many people are you seeing, because there's all that fear out there, people selling really good companies at 52-week close at the lowest valuations ever been. Within probably a few years' time, as long as the company carries on doing the right things, that's probably going to look a really bad mistake. Fear is with the biggest emotion. Even euphoria. We've seen what euphoria has done to the stock market before. Fear is even worse. Fear will send the stock market down even lower. And it's same for like the headlines. What a lot of the media want to do is create this fear. And I'm not predicting what the outcome will be in the situation, but you've also got to look at that situation. And for example, if this does not escalate to anything, a lot of the geopolitical events in the stock market that kind of get built up, and you think about a lot of the not with all the events, but for example, something like the North Korea missile crisis. This was another event that was like massively made out in the media. Oh, it won't be long until North Korea starts firing missiles at, so and so, and look at the response to that. And you've always got to look at that point of view. So, if this situation does get worse, obviously that's going to affect the stock market, but you've got to look at what's happening in the moment and kind of see from there what you think is going to happen, I guess, really. So for me, though, I've got to say this is probably what has happened over the last kind of 6 months. This is the biggest thing for me out there. This will obviously, if Russia did go into Ukraine, that would cause a lot of problems, and it would cause probably a lot more pain for the stock market. And this is probably the biggest thing that will, in my opinion, affect the stock market that has come up in the last few months. So it is the one to probably keep an eye on a lot more. But I'm going to show you something else. So let's just pop back to December 2021. A new variant came out. I'm sure you know this variant. And when this variant came out on the 6th of December, the stock market went down. People went, oh, this is why the stock market's going to crash. We're going to go back to the CV situation. This variant's really bad. And look at these headlines from the BBC here. It said here that the Omicron variant has such a long list of mutations that it was described by one scientist as horrific, while another told me it was the worst variant they'd seen. So this was the media coming out saying this is going to be the worst variant ever, and it was all built up. The stock market went down. Look at where we're at, 3 months after that. You don't really hear much about it now. All the worries of that is kind of like, in fact, this was actually a bonus, because this variant was even not as bad as the Alpha or the Delta. This was not the worst variant out there. And that's just how media want to kind of build a lot of fear. And you've got to always look at the long-term point of view and not look at a lot of these macro events, because these macro events may take the headlines for the next 10, 20 days. But in the long term, will these sort of things affect the companies that you're investing in? And you look at like a lot of these cases here, in the time, when this was out here, the cases were booming up, and everybody would talk about, oh, there's going to be more lockdowns and everything like that because it's spreading so quickly. And what do you hear now? You hear nothing about the situation. You look at this here, like this is the US cases. they're back at where they were at December time. Does this make the headlines? No, because it's not fear. It's not going to sell the headlines. So this is why you've always got to take everything from a long-term point of view, not from a short-term view, and also take everything as well with a little bit of a pinch of salt as well. And one of the things that you're seeing out there pushed a lot more at the moment is the US inflation. People are saying, oh, the inflation is going to be a problem, it's out of control. This is also leading to Fed rates and everything like that. And for me personally, this is something that is going to happen from time to time. At times it will be low, at times it will be high. For me, this is something that's just naturally going to happen, and this will sort itself out over a long period of time. And it's same with the Fed decisions. People are panicking because the Fed are raising interest rates. You got to remember, a lot of these interest rates are like at historic lows. And you look at some of the, the interest rates that we're at right now. We've had stock markets that have performed absolutely amazing with a lot higher interest rates than what we've had right now. So these are things that people are trying to put out in short, that are trying to like push fear on the market. This isn't, when you look at these sort of things aren't going to be what causes the stock market to drop, 30-40%. It's not going to happen. It might cause a little bit of short-term pain. But when you look at a lot of these events in the long term, it's really not going to affect it. And you should be making really investment decisions on these sort of things. And, people saying, oh, this is going to stop the US, the growth, the GPD growth, we're going to have a double-dip recession and everything like that. The thing is that people don't realise is that at the moment, the economy is kind of balancing out. It's been a tough time for the economy because you've had times where you've had a massive reduction in GDP, you've had a massive boom in GDP, and sure, it's going to be a little bit balancing out because you've had things from everything shutting down to opening back up to shutting back down to opening back up. But you look at the economy right now, the economy is in a good place. Everything is now starting to go back to normality, and in my opinion, the economy is in this adjustment phase where it's trying to get back to that normality life. And while you have that balancing out, a lot of businesses and things in general are just trying to find that balancing place of where it's had to go from no demand to lots of demand to no demand, and eventually this will balance itself out. When you look at the long term, we've had such a constrained economy in the last 2 years where it's things are being starting and then stopping. We're getting to the point of view where we're going to have an economy that's going to start getting opened up. This is probably going to be the first year where we have, decent travel numbers, and not worries about events being cancelled. So when you get to that point of view, we're not going to hit a recession. More than anything, we're going to have an economic boom. So when it comes to if the economy is going to be okay, then a lot of these stocks are going to perform very well, because if the economy is going to do quite well, sure, there's a few little concerns about Fed rates and inflation and all that, but that will balance it out, because what will happen is the economy will still do very well over the next 12 months. It hasn't got any of them kind of risk concerns over it for the first time for a long time. It will do okay. So a few people are saying that it's going to be one of the biggest crashes ever, massive recession. There's going to be a few speed bumps on the way when you do adjust from this economy that's been opening and shutting all the time, and now we finally have it probably, touch wood, that this is the first time that we're going to have an economy just be able to do its thing, and people won't have to worry about certain situations, and the world will be back open up again. And the only way that we'll have a stock market that falls off a cliff is a recession, and I don't see a recession going. A lot of people are putting a lot of pressure on these short-term things. There's a lot of negativity out there at the moment. Obviously, just in general, when stocks go down, everyone has this mindset of negativity out there and or worst thing ever. And then when stocks are going up and putting in new 52-week highs after new 52-week highs, everyone wants in, and that's what we have at the moment. The stock market is going down and everyone's just taking a negative point of view rather than looking at the long-term point of view. And everything out there looks okay. Sure, there's a few little concerns at the moment that's going on, but more than likely these will balance out in long term. And at the moment, for me, when I look at this situation here, I've always looked at something like this and gone, people ask my opinion on what I think of like small caps. I think small caps are positioned to have a fantastic 2022. I think they're going to have a really good 2022, because a lot of these small caps now, a lot of them are putting in really good growth. They also have obviously the lowest valuations they've ever been at. A lot of these high growth stocks, small cap stocks, have lost half the value, and they're still performing absolutely amazing. The only risk to them is if we did have a recession. And for me, I look at 2022 and I think a lot of these small caps growth stocks will do absolutely amazing. The big tech, I've always been a little bit like, they're trading at a bit more of a higher valuation, so I've always been a bit sure on how big tech would perform in 2022. But the more you see big tech, and it kind of flatlines, and goes down, the likes of PayPal losing half its value, Facebook losing half its value, the more that happens, I do look at a lot of big tech and going, yeah, I wasn't sure on what big tech would do in 2022, but if it carries on this rate, I'm starting to get a bit more bullish on big tech. And I think generally in 2022, we should have a good stock market. It could be a potential, bumpy time while a lot of these stories are out there, while there's still a lot of negativity out there, and a lot of the media is pushing a lot of this negativity. In general, everyone's, bearish on the stock market, but it rotates very quickly. And it would only take, I've seen, when this was happening, I saw everyone out there going, oh, this is it, it's going to be a bear stock market. You know what happened when we had this bounce here? It all disappeared. Within 1 week, the sentiment in the stock market went from, I'm not saying it was ultra bullish again, but it just kind of went, this could be a bit of a bounce here. This might be the bottom here. And that's how quickly it changes. So you imagine how quickly this stock market will change if we have, a lot of these growth stocks, jump 10, 20, 30%. A lot of these growth stocks, very quickly the sentiment changes and everyone, alters and goes, okay, so it's all going to be good. If this story disappears, once again, everyone starts getting very bullish on the stock market, and sooner rather than later, people go, oh, I wish I bought on that dip. That's what will happen. In the long term, when you think 1, 2, 3, 4, 5 years, this sentiment will go away from the stock market. It's proven. Let's just look over this long period of time of the S&P 500. There's periods of time where it has bearish sentiments going on in the stock market. But what happens every single time? Then bearish sentiments eventually fade, and then we go on runs. And we will, sooner or later, we will start going on very good runs in the stock market. So we'll wait for that to happen. So overall, I still think it'll be a very good year for the stock market for a lot of small and growth stocks. Big tech, I'm a little bit more confident on what I was at the start of the year, but still not too sure on it. But yeah, again, a bit more bullish on big tech now because of the drops they're having. This week, another big week of earnings for a lot of the mid-cap, small market cap stocks. Like I said, Monday closed on the stock market for the US side of it. Macy's, Teledoc's going to be a big one. These guys have been stung absolutely huge over the last. This is one of the growth stocks, small market cap stocks that comes into the category that we've been talking about in this video. Judging by what last week was such a negative week in the stock market because of the whole Ukraine-Russia situation. Growth stocks got put in that category of, even if you bring good earnings out, we're dropping you in share price. So Teladoc might fall in that category if we have another negative week, but this is the prime example of another stock that fits in that category, and I'll be checking them out. Mercado Libre, another stock that falls in that kind of category, being burnt down in small caps, mid caps. One of the lowest valuations it has been at ever. One that I really do like, or seeing how they do. Wednesday, you got Lowe's, Overstock, Fubo TV, Skills. I'm sure this, we talk about, high risk growth stocks and small caps, just going down. Skills is like a high risk stock. So I'm sure whatever they bring out, we'll probably see a drop in their share price. Hertz, Clover, eBay, Lemonade, same again. I would say the same for them. Thursday, Alibaba, that'll be interesting. Moderna, Nikola, I still can't believe these guys are around. Nikola, Wayfair, DigitalOcean, this is a company that's come on my watch list recently. Really do like them guys. Thursday, probably the biggest week for earnings in the this week. Block or Square, Coinbase, Etsy, they're interesting once again on a drop. Beyond Meat, Open Door, Rocket. So obviously I'll be checking Beyond Meat earnings out for sure on here. And then also on Friday you've got Foot Locker, pretty good dividend stock to be looking at as well. So yeah. So those are some of the earnings to keep out for next week and just see how they react. So yeah, just a little bit of a recap overall. It seems to be good to kind of do it at the start of the week and just where we're at. And yeah, just talking about the kind of negativity out there with a lot of the things in the stock market, and also some little earnings for going into next week, guys. So hope you enjoyed the video. If you did, hit the like button if you're new, subscribe, and I'll see you next video.